Welcome again, I'm Miss Fatima, your course accounting teacher. So today we will start a new topic, accounting for materials. Before we start, let's have a good recap about what is direct material and indirect material. We will cover several subtopics. We will start with the material planning and documentation, how to calculate and determine direct material costs, how accounting system support for inventory, how we value materials using FIFO, LIFO and EVCO, and lastly, economic order quantity. These topics will cover learning outcome number 1 and number 2, where it will cover all the topics that I've mentioned earlier during the previous slide. Are you ready? Let's get started. 3 types of inventories that you have to know. Number 1, raw material inventory. Raw material inventory is a material where it is not yet been processed to become a finished goods. The original form is stored in a warehouse nearby the production factory. I give you one example. If we are producing a cupcake, the raw material inventory purchased from the supplier can be flour, can be sugar, butter, eggs. If we are producing furniture, woods. If we are producing water bottles, plastic water bottles, plastic pallets. Second type of inventories is WIP. WIP refers to work in process. Work in process means if it is the ingredient to make a cupcake, probably the ingredient has been mixed inside the mixture and become the mix and is ready to be put inside the oven and bake. Let's say you are producing bread. The bread you sold to your customer is supposed to be the ever ready to eat bread. So the dough for the bread is classified as WIP inventory. The last types of inventory is finished goods inventory. We can say that the goods are ready to be sold to customer as our product. So the finished goods inventory usually will be stored in a warehouse where it's ready to be transferred to be delivered to the customer or to your distributors. Now we will learn about processes and documentations for material procurement. In this procurement process or purchasing of raw material process, please make sure that you understand the whole story and how the cycle goes. So, ready? Right. If you look at the slide here, we have a factory. Factory is where the production takes place. So this is where the products been produced and the raw material been transferred from a warehouse and been used for manufacturing purposes. Below the factory here is a warehouse. Warehouse is a place or location where all the raw materials will be stored. All the raw materials will be stored in a warehouse in order for the company to maintain it in an appropriate, for example, temperature or conditions. Look at the right side here. we have a head office. Let's say this is a head office, and inside the head office usually we will have several departments. Among others is a finance department as well as procurement department. The word procurement refers to purchasing department. Some companies call it as purchasing department. So finance department has a job of releasing or approving any payment or receipt. So when we have to pay to supplier, finance department approve the payment and release the payment to the supplier. On the left side of a head office here, there is a procurement department. Procurement, on the other hand, in charge in identifying suppliers, list of suppliers, scan or filter which suppliers can give the best offer to the company. So the procurement department should identify which suppliers has offers the best quality with the affordable and appropriate price, plus probably has the location nearby to the factory. This is important because the choice of the suppliers are crucial in order to make sure that the product costs become low or high. If we are unable to identify which suppliers are the best, probably we are producing our product at a higher price than at a higher cost than our competitors. Suppliers are the one where we buy or purchase our raw materials. So now, the story begins this way. The factory. In a factory, we have a production manager. Production manager. This production manager in charge on the production or manufacturing of the product. Let's say, up to a certain point, production manager realized that one of the component of the materials are almost finished. So the production manager go take a look at the warehouse, asking from warehouse to transfer them the component. In a warehouse, there is person in charge as well. It's a warehouse manager. So warehouse manager job is to take care of the items in the warehouse, make sure that the item all ever ready and transfer to the production department. So warehouse manager also will keep on track on the level of the component or materials. Let's say one of the materials have almost finished, means the level are very low. It is alarming that the warehouse manager need to request from procurement department. So in the procurement department, we have a procurement manager. Procurement manager. Remember, when a warehouse manager requests the item from procurement manager, warehouse manager will fill up a form which called as purchase requisition form. So purchase requisition form is a form where warehouse manager fill up the number of items or the component, type of component, how much they are needed and when they are needed. So purchase requisition form will be sent to procurement department, and procurement manager look through list of suppliers, filtered who can offer them with the best price and quality, met the specification detailed in the purchase requisition form. So once procurement manager identify the supplier, procurement manager will send a document to supplier called purchase order. So once the purchase order is sent to supplier, supplier will look through the items and transfer the goods to the warehouse directly. So while transferring to the warehouse, they deliver the goods. They will bring together with a document called Goods Delivery Note, GDN. So GDN is a form where it declared that they already delivered the goods to the warehouse. And upon receive it, warehouse manager will fill out form GRN, Goods Receive Note. Then supplier will issue invoice to the finance department. Finance department will identify, will cross-check with the number of goods received, and finance department will release the payment to the supplier. So this is how the process of raw materials will take place. When the finance department release the payment to the supplier, supplier will issue a receipt to the department, right? So that is the whole process of procuring or purchasing raw material from suppliers. Please take note what are the documentations involved. Please take note why the documentation, what will be the purpose of the documentation. Okay. So I want to see whether you understand the story just now or not. So now let's have a bit of recap. Question 2. It will take about 15 minutes. Second part, it is a direct material cost. So basically, direct material cost, it involves any cost incurred in the middle of 2 points from the supplier location until the goods reach our warehouse. So in the middle, there are several costs incurred. Among of the costs incurred can be ordering costs, Number 2, the cost of the raw material itself. Number 3 can be transport inwards of the raw materials, probably via shipping or via plane or via train. Okay. Insurance of the raw materials. The insurance is not for the business factory and so on, but the insurance specifically for the raw material itself. The storage cost during the shipment at the airport or port, as well as tax, for example, GST or VAT tax and import tax. So these are the costs which may incur in the middle from the position of a supplier location until it reaches the warehouse. Let's look at the example. So in example 1, it mentioned that in August 2020, J Company purchased raw material from supplier Air Limited. Based on the information given, calculate raw material cost for J Company. It's not a difficult question. You just have to identify what kind of cost should be included in under direct material cost. So first, price of raw material definitely included. Ordering cost, yes. Import tax, definitely. Shipping cost, yes. Delivery goods to customer. Okay, when we deliver goods to customer, it's not included because it means we deliver the finished goods. Transport cost, which will be borne by the seller, also will not be included. And the value added tax. Value added tax will be included. So only 2 items will be ignored. Let's look at the answer. So as you can see here, the example answer, okay, we ignore the delivery or to customer cost and transport cost which bear by the seller. So we add up all the total. So the total direct material cost will be equal to 28,020. Let's look at the question. Yes, recap activity 3. In August 2020, Maya Company purchased raw material from supplier A Limited. Based on the information given, calculate raw material cost for Maya Company. Now, let's look at the accounting system for inventory. There are 2 types of accounting system for inventory. The first type is perpetual inventory system. Second type is periodic inventory system. So what is perpetual and what is periodic? Let's look at the explanation. Perpetual inventory system is the quantity and the cost of inventory on hand is updated immediately whenever inventory is purchased or sold. So the updated data or real time data is maintained. So the keyword here is the real time data is maintained. And another keyword here is updated immediately. On the other hand, periodic inventory system will only update the inventory level once the stock count takes place at the end of accounting period. Therefore, we can say that periodic inventory system will not have a real-time updated level of the inventory. So how this kind of system will affect the accounting system? Let's look at the next slide. Let's say we have these transactions where the Matrix Sundram Berhad purchased and sold its books. How this will affect? In perpetual, when we purchase, we will directly debit inventory and credit cash. Cash at credit because when we purchase our inventory, we pay. So credit cash, the debit side will be inventory. However, for periodic, when we purchase, we record it as debit purchases and credit cash. Debit purchases shows that we maintain purchases account and we not update the inventory account. We will only know the inventory level once we do the stock count. When we sell to our customer, we receive cash. So debit cash, credit sales. And you have another double entry which is debit cost of goods sold, credit inventory. So this is the additional double entry if you are using perpetual method. Whereas for periodic, we don't have to update inventory level. So the double entry is as direct as debit cash credit sales. Again, the inventory level will be updated during the stock count.